Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently and what we would expect to happen next. As I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe? You can always unsubscribe later. And if you tap the bell selecting all the notifications, you will not miss another video update. If you haven't yet joined us in Discord, guys, you're missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and it's the first place that we go to notify you of everything that's going on in the crypto space. So why not check it out, linked in the description below. Let's make a start with this one though. Let's jump right down into it. So we're going to be taking a look at Bitcoin paired up with USDT on the hourly chart, and Binance will be our data source. As you can see here, we're going to just quickly review the previous videos of what's been going on. So as you can kind of see, we were expecting 30k. We called it a fake pump. We just rally up just above 30k here. I think it was $30,036. And then of course we saw the liquidity grabs as price pulls all the way back down again. So you know, it's complete pump and dump essentially. It's about a 9.33% drop that we saw. And then of course, you know, we're starting to see bearish setups and we're expecting $25,000. As you can kind of see, the bulls failed on the weekly close position and price dropping. So ultimately that's kind of where we are. Everything's kind of been following kind of what we've been expecting and kind of what we've been talking about for the last week or so. And you know, we've got another line on here, another arrow. So let's go ahead and review what's been going on with Bitcoin on this hourly chart and see what we think is going to happen next. So we'll start off with our Elliott wave side of things and then jump into smart money and resistance support, supply, demand, all that kind of stuff. So as you can see, we had the 5-wave drop to the downside. Now, as we were saying, with this 5-wave drop over here, it's one of two things. You're going to either start with a 5-wave structure or end in a 5-wave structure. You can't really have it in the middle. So we know that this is either the beginning of a move or the end of a move, okay? And it's hard to know exactly which until you get confirmation, okay? Now, we can see that we got close to saying that it was the end of a structure, okay, and we started to rally on up, but it failed to do so. So it still remains true that this is possibly the first wave of a structure to the downside, and we can start to see this actually playing out quite nicely for that. So we can start to see here that we do have a nice nested structure taking us down a little bit deeper as well. Again, we haven't gone down lower than the swing low, which is all the way down here at the moment at 27,235, but the expectation is that at some point that we are going to be doing that. Okay, so let's go ahead and review this structure. What is going on in here? Well, it does to me look like we have a very interesting 5-wave structure emerging here, and it looks like we have an overextension within our wave 5 of wave 3 of this structure. So let me show you what I mean. Okay, we have a wave 1, a wave 2. All of this is our wave 3, potentially wave 4 coming down into wave 5. Okay, and the reason for this is we have this extension down here. Now, it's possible that under a diagonal structure that we have a wave 3 here, but it doesn't really meet the requirements. So I think this is the best place to kind of have it with the extension going in, and then we can start talking about that next move to the downside, okay? Now, wave 4 may or may not yet be done. Invalidation of this 5-wave structure, as I have it drawn here right now, would be that if wave 4 were to come and cross 29,160, it would create an invalidation of that structure. However, it's possible that we've just marked this up incorrectly, and you know, we maybe have our wave 3 here with a wave 4 there and a wave 5 just down here like so. Okay, this particular pattern would basically mean that you'd hit your 1.618 impulsive trigger points whilst simultaneously finishing a wave 5 and then pushing to the upside. I don't like it as the ideal. I think there's one more push to the downside, but we'll see how that goes, and we can adjust the waves to what actually occurs, and then that'll allow us to kind of be more informed about the next move. There are a couple of things that are going to be happening here, but before we talk about those, I think it's probably worth noting where this wave 4 is. Okay, so the first thing we need to acknowledge is that we're finding ourselves in upper resistance right in here. Let me just go ahead and snap this in and pull it across. Okay, so we can see previous area over here of support now turning into an area of resistance. We're overbought on our hourly chart, so rejection from here to the downside is something that we do need to consider. At the moment, we are talking about just pushing that price down just a fraction further to complete a structure, and that would be 27,367 to 27,552. Personally, I probably wouldn't trade this, but if we wanted to, we could probably short the market on market right now at the point of recording put in the stop loss just above the resistance line there, but there's a high probability of getting stopped out, and then just put in take profit down on that higher range there. We can give it a little bit more breathing room if we wanted to, but ideally I'd be looking for a 3.0 risk-reward ratio if possible, so it becomes quite difficult to get a good trade, in my opinion here, without increasing your risk for liquidation. So ultimately probably not worth this one. I would probably sit this one out and wait for the next big move, which will be a long position, which of course if I was to go long I would be looking down here, go long up more towards the higher range here of invalidation. I'll talk about why in a moment, and making sure that I got my stop loss down lower than this swing low over this side. Okay, this gives me a 2.5 risk reward ratio. Not too bad, could be better, but pretty good nonetheless. And we can take that into the next ride. I think that's a better idea than it is to think about shorting the market into this little move down here. So as we can kind of see, you know, that's kind of what my expectations are. And why would I say go up there for a long position? Up there for a long position because I do think we have ourselves a wave 1 going up into a wave 2, and then we're going to see a wave 3, 4, and 5 to the downside over here, and it'll be pretty significant. Let me grab that little fifth wave movement. There we go. And it'll come down like so. Okay, so you can start to see that we have this kind of structure coming down here. Now, the reason for this is that we have this 5 wave. We'll then have a 5 wave move here. We should then move up. Let me just move this out of the way just a fraction. We'll come up here in another 3 wave structure and then down into a final 5th wave movement, which will complete a wave 3 structure down here. Okay, so if I zoom out of this, you can then start to see we had a 5 wave going up in 3. We have 5, 3, 5, 3, 5. That completes our 3rd wave. We'll go up after this into a 4th wave movement, and then have another 5th wave movement to the downside. Then that there is your trend reversal. Okay, so that's kind of what we're looking for. Obviously, it's too soon to be 100% certain that that's what's going to play out. So again, you know, we're going to ride this slowly over time and see how it kind of goes. But you kind of get the idea as to kind of the things that I'm looking at and where my mind is at when it comes to what's emerging here from the structured point of view. So right now we have these little movements. We can expect a move to the upside, then we can expect another move to the downside and so forth, right? Volatility. And it's great for trading and great for profit. So it's important that we understand, you know, the direction of the move and all that kind of stuff. So Elliott wave theory, looking pretty positive. It's kind of following our positive in the sense of that we understand where it's going and, you know, we're able to take advantage of that. But if we jump over into smart money concepts, what do we see? Well, we're still in our bearish structure. So our structure has not changed. For clarity, we had our change of characterization up here from a bullish state to a bearish state. And we also had a confirmation with a break of structure down here. That break of structure isn't changing from bearish to bullish. That break of structure is confirming that we're bearish. Okay, so we had a brief movement up and then we broke that move upwards by coming down lower than the local low. As such, we get confirmation that we're bearish. I like to think of these things more as a CTS, confirmation of the trend, rather than a break of structure. But there you go. This is an indicator by 𝗕𝗓𝗪𝗀. It's smart money concepts, and it's not perfect, okay? Because we do see some imbalances in the order books that should be highlighted, and yet are not, okay? And so we want to be a little bit cautious here. As to kind of what is going on with that. Okay, this is something that we saw previously over here. Okay, so we saw that we had a fair value gap just up here. Okay, and we basically the indicator did not map this on. Okay, and we saw this and we said, okay, well, there's a high likelihood that we have to go to $30,000. This is why we called it a fake pump to the upside. We had an institutional candle here, or an imbalance in the order books here, that wasn't being mapped by 𝗕𝗓𝗪𝗀, and then we started to see this move to the downside, right? But we knew that we had to move back up, fill this fair value gap, okay, and then come back down again. So you can see here, we created the gap, okay, 𝗕𝗓𝗪𝗀 indicated it only briefly, then this wick, I think, just basically broke their indicator. But we still mapped this up. We knew that we were likely to come back up to 30K and now down. Why do I talk about this? It's because we've got the same scenario unfolding right here. Okay, so we had the candle come down here, create the imbalance in the order books, and this is now the range that we are going to be looking to revisit. Okay, very similar to what was over this side. So this one, this particular range, is targeting out 28,680 to 29,215. Okay, so this is the area that we're looking for on this one. Okay, so we can see we move down, we probably finish that little structure off, then we come up here, hit this range, and then we get rejected. This is our wave 2. So if I come back here, you would look at this as our wave 1 coming down, our wave 2 comes up, fills out that fair value gap, and then we come down and so forth. Okay, so smart money concepts is actually very much aligned to what is going on with Elliott wave theory. We can see these confirmations between the two different styles of analysis, and we can see that we are still in a bearish state of play. Equilibrium also happens to fall right inside this area, so yeah, I think we've got a high probability of a move up towards that higher range, 29,000, before we then continue our move to the downside. Expect volatility, guys. That's kind of the nuts and bolts of kind of what I'm saying here overall. So other than that, guys, there isn't terribly too much more to talk about here on Bitcoin. Expectations are that we're going to be taking a small move to the downside before we rally on up towards 29k, hit 29k, and then expect a big pull to the downside. I do want to be shorting at around 29k because I do think that is going to be the place where a lot of the profits are going to be made. I'm going to leave the video there. If you found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't joined us in Discord, check it out, guys. Linked in the description below. Until the next one, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.